Crypto cats, my name is Tom. I am a crypto investor and I'm back. After 5 weeks on a desert island with my company Desert Island Survival, I return to look at this. Nonsense. What is this? What have you done? What have you been doing to the markets? It's a bloodbath. ETH is down 9% this week, Bitcoin 10% or so. Other L1s are taking somewhat of a hammering. Luna in particular is down 20% this week after some complications with UST, which we'll talk about in a bit. Put under pressure, almost losing its peg, but we'll discuss shortly. We do have some L1s doing all right, like Algorand, which is up 27%. Tron is up 30%, perhaps because the Justin Sun algorithmic stablecoin competitor that offers 30% compared to UST's 20% with Anchor. Maybe people are turning towards that. I would be a little nervous to do so personally, but anyway. Frax parity for the week. Curve solid, 15% week. Well done them. All right. Just a little different. I wanted to look at how far from the all-time high we are with a number of cryptos. So, Bitcoin and ETH are your benchmarks. They're 50% from their all-time highs, more or less. ETH slightly better. Same with BNB. And then we get to the dross. You've got your XRP, 85% down now. Never made a all-time high since the all-time high in 2018. So on this run, it failed to make a higher high. If we look at if we are slipping into a bear market and we are saying, okay, this is an intercycle, then that's an alarm bell for me. Just clarifying that it is a shitcoin. Solana, wow, it hit 260 at its peak, 70% down already. Cardano, 75% down. But then we have Luna, 45% down, so actually better performing than the big daddies so far, despite it losing something like 10% today. Due to the peg issues. Anyway, looking at the TVL, total value locked in DeFi. So this is different chains and how much money is locked within them, how much capital. Of course, ETH has been giving its dominance to these rival L1s. Now sits at 55% of the total value of cash locked in blockchains. And Terra has continued, if you see this green band, Terra continues to add more capital, now accounting for nearly 15% of the total TVL. And that is despite today's massive change, losing 16% in a day because of the issues with UST. But overall, the trajectory has been up and to the right because they can offer 20% returns. Is it sustainable? We're going to find out this bear market if they have the metal to survive and achieve that. Many people are very skeptical of algorithmic stablecoins, and it's going to be a challenge. If they can do it, huge things ahead, huge things. All right, so looking at the burn, for how much Ethereum is burned, you can see in the last 30 days we have this massive leader here, more than all the NFTs and such, which, well, it is an NFT, it's other deeds. This was the Bored Apes land sale, and it burnt 71,000 ETH, which if you stick that into your calculator is $186 million worth of ETH. Turned ETH deflationary, so thank you for them. They've been talking about creating their own L1 chain to deal with this because of all the pitfalls of Ethereum. Apparently there was lots of issues with their smart contracts, and that's what actually led to these very, very high gas prices. They would be better building something on an L2 roll-up, probably, but what do I know? So yes, UST, it hasn't lost its peg, but you can see, so this is UST, of course, algorithmic stablecoin. It's meant to stay at $1. It got down to 985. Okay, so what's that? It was a 1.5% drawdown as it was put under pressure. And what was interesting was that they were dumping, so they've got reserves of Bitcoin and obviously Luna and a bit of AVAX, but they had undeclared reserves of ETH, which they were dumping to prop up the peg and keep it here. So a few people are unhappy that this is the case and that something like this can have a big impact on the broader crypto market as a whole. There's also some conjecture of whether this was a forced move by big whales trying to short Luna and influence the market. So we'll see. This has all happened in the last few hours or so. what we need to be talking about really is the broader macro market. So stocks, this is a few weeks old. Stocks basically have had their worst start to a year since 1942. So since World War II, this is the worst start we've seen. And April was the worst month since the 2008 Lehman Brothers incident, the financial crisis. So it's this macro environment which has been forcing crypto down. I firmly believe that if we were continuing to be in a bull market in the stock market, in the macro environment, that we would be hitting all-time highs. But money is becoming tight. We'll be talking about this more in the charts in the second half of this video. But a few more news stories. So Panama has said that they're poised to approve Bitcoin and 8 other cryptocurrencies without limitation. This was again a few weeks back, but I've been away. It was nice disconnecting. It was nice not having to care about the crypto world. It is tiring. Gives you the grey hairs. Not just Panama though. The Central African Republic, which has 8% of its population on the internet, is adopting Bitcoin as legal tender, which seems weird to me. Anyway, Meta, Instagram supporting NFTs for Ethereum, Polygon, Solana, and Flow. From Monday, I understand there will be a beta rollout of this. So this is massive adoption if you think about that. Starbucks releasing a NFT loyalty program, something along those lines. Let's see if they can do it the cool way. Budweiser did a pretty good job. We'll see if Starbucks can do a decent job themselves. This is quite a nice take, like looking at Web 2 and what it will become in Web 3. Kind of pertinent when you look at, say, like YouTube to Odessa, because Bankless have just had their YouTube taken down. I imagine it's just the algorithm not liking something and it will get put back up. But it's just another case point for why we need Web 3.0 when large centralized institutions can make sweeping changes. But yeah, you've got GoDaddy to ENS, Spotify to Audius, etc., etc. Quite a nice little take there. All right. And of course, Elon bought Twitter, and within the funding that he's raised for Twitter, $500 million has been invested by Binance, which is significant. This is, it's a voice, a large platform out there which has got crypto backing. It means obviously that Elon is very receptive to that, and this is kind of a form of lobbying, if you will, and we're seeing this more and more. And Binance really starting to flex their muscles with the huge cash reserves that they have. So overall, very bullish long term for this space. Now, you know that I'm very much a POKT fan and bullish on POKT, and many people have been asking me where do I stand with the quite appalling price action that we're seeing. My eye has just been on the relay growth and the solid work that the team are doing, adding new chains and hitting all-time highs with the relays. In fact, if you go to poktscan.com, you can see that we're over 900 million relays in the last 24 hours. We hit an all-time high yesterday. We'll probably hit an all-time high again today. And I expect we're within this week, we should hit the hallowed billion-dollar relays within a day, which is fantastic. So Binance Smart Chain has been added, Phantom has been added and is doing 60 million relays. So, the actual project, if it was just simply a company that had stock, would be pretty much hitting all-time highs if we're in a bull market for the stock market. But the problem, of course, with POKT is the tokenomics. So when you run your nodes, you receive your POKT token, and you need to spend. So I run nodes, for example, and they cost me $260 per month per node to run it. So my bills are in US dollars, my income is in POKT, and the lower POKT goes down, of course, the more POKT I'm forced to sell to cover my expenses. So it's not surprising that POKT's token price is taking a big hit when you consider this. But we are going to make it proposal, which has been lowering these rewards by 10% a month. I think we're into month 2 of that. We've got 4 more months to go. And there's talk on the horizon of this being a deflationary asset. I'm personally using my cash reserves to pay for my server costs and just stacking as much POKT as I can at these prices. It's possible we go lower just simply because the selling pressure will continue to be very high in all likelihood, as all of the node runners are forced to convert to dollars to run these nodes. But I wouldn't be surprised if there's some big Web3 infrastructure funds loading up on Pocket on a daily basis at the moment. Long-term, uber bullish. This is an excellent project to be accumulating throughout these leaner months. Maybe the hard winter. Looking at the Bitcoin rainbow chart, this is telling us that we've now entered into the accumulate phase. We're not into the strong buy or basically a fire sale, but you can see that if we're using this logarithmic curve, we are getting down into the cheaper areas within that chart. All right, let's jump into the charts. So I'm going to start just with the stock market because it has been the tail that's wagging the dog for crypto, if you will. And you can see that we had another nasty week. We rallied only to give back the gains and to form a shooting star, which is not great. Okay, we didn't end right at the lows, but it's not a very, very pretty candle for the week. And we're sitting right at this significant resistance. So a break here, and we could really see a move down, perhaps to the previous highs before the COVID pump. If we do get that, that would be a 15% move down for the stock market. But this isn't fair to value it here for me because, of course, 40-50% of all of the dollars in history have been printed. This is dollars being printed. And this is that trajectory of dollars being printed since COVID. So I can actually tell you that number. 42% of all the dollars in history were printed since COVID happened. And so, of course, that's devalued asset prices. So what we can do is we can look at the same stock market, the S&P 500. And what I've done is I've divided it by all those dollars that have been printed. And I put these bands on here of kind of overbought, oversold. And you can see, I think what's really interesting is that if we go back to 2015 and take us to where we are now, and we account for all of that dollars that have been printed, the stock market is actually up 5.7% in the last 7 years. It's ridiculous. It's an illusion that they're like, oh, the stock market's hit brand new highs. It's all just devaluation of currency, and it's why we have to protect our money with assets. 5.7% growth for the stock market in the last 7 years. And what they tell us, of course, is that it is up by 100%. They claim it's 110% up. It's actually 5% up. Anyway, the US dollar, so this is DXY, this is the US dollar versus the 5 major currencies. This is mostly an index of the dollar euro, but you can see it's coming to a really significant place here. So the dollar is up, testing this high that it hit in 2017 and 2020. A break here, and we could really see the dollar start to move even further. So I wouldn't be surprised if we break here that we head up towards 116 or so. But yeah, so right now the system is under stress. We're seeing quite significant trend lines being tested. The same with the euro. We're getting down to like 10-year lows with the euro dollar. So big things are happening. Seismic things are happening in the markets. All right. So if we look at Bitcoin, let's get back in crypto. Come on. This is Bitcoin. I'll put it on the regular chart. So this is Bitcoin on our standard. This is our standard Bitcoin chart. Let's say we do manage to hold this kind of noisy area. This is typically where you do tend to get some supports, is where you get this kind of noise. It's going to be a big ask. Then that would be 30,000, 31,000 holding for us. We will see. It depends how bad things get in the macro environment. Of course, the big thing is we have inflation. So we have 8.5% inflation in America. The reason that that's bad, effectively, for the stock market is because Jay Powell can't just print us out of problems. He can't save the economy with printing and artificial stimulus, because if he does any more of that, then inflation's just going to, the dollar's going to be compromised. Inflation's going to become out of control. And so they're kind of a bit against the corner. They've got to stop the inflation by rising interest rates. And if you raise interest rates, then that makes things like equities and other assets less appealing. So anyway, if we get Bitcoin and we put it on a log scale, so this allows us to look at it over longer periods of time. You can see that, we have this nice, perfect trend line. One break here, but this is the 2020 liquidity event. For me, that's an erroneous data point. I don't think that is something we need to put our charts with. But this has held, apart from these two events, which were kind of flash sales that we got back above, this has held basically for the entirety of its time. So if we are to go down to test this major trend line, then we're only about 9% away, which incidentally is this same $31,000 support level. So that should hold up. And interestingly, what we can do is I can then divide Bitcoin by that money supply. So just like we did with the stock market, I'm dividing Bitcoin by all the money printed. And you get this nice chart. And you can see that this is the 2017 high. So this was $20,000, if you remember what we got to back in 2017, $20,000. But if we divide all the money printed, actually, that is the equivalent of $31,000 today because of all the dilution of currency. And so this makes a lot of sense as potentially a support level again here. So it means 9.6% down for another retest of the previous high of Bitcoin. And I would say that it's a lot more mature than it was back in 2017. We didn't have institutional investment. For one, and you could say a lot more for Ethereum. You know, we didn't have DeFi, we didn't have NFTs, we didn't have these use cases. We didn't know we were going to make it. This time, crypto, the genie's out the bottle. We've hit escape velocity. It's a very different world. So potentially, I mean, this is major support, 9% down from here. We could absolutely break that if things get worse. If China wants to mess up the supply chain even more, if things escalate in Ukraine. If the US economy becomes even worse, inflation gets into the 10s, 11, 12, 15%, then of course we're going to see further tests. So if we come and test this trend line here, then that would be a 23% drop for Bitcoin, and a 23% drop for Bitcoin from where we are now would take us down to 26,000. So for me, I'm saying 31,000, 26,000 are your well, I'd say 26,000 is your worst case scenario, and 31,000 looks like it's going to get tested for sure. But never try and time the market. Something could change dramatically tomorrow, but there is a good chance that we do come and test the 31,000 or so. All right, another cool chart I want to share with you is Ethereum divided by the Nasdaq. So this is basically how has Ethereum performed next to US tech. And you can see that if we go from, say, like the COVID low, so if you chuck your money into ETH instead of the Nasdaq at that point, you'll be up 1,200% more than the Nasdaq. And the Nasdaq itself, from that COVID low, obviously didn't do badly. The Nasdaq itself did 100%. But Ethereum did a lot better, didn't it? And you can see that if we look at Ethereum versus Nasdaq, we've held our highs, so they both have dropped a bit, but we've held on to our gains, and we're now in a very kind of pronounced wedge formation where something has to give. So ETH is now at support versus Nasdaq, and we haven't got too long really to see out before it's shit or get off the pot time for ETH. So I'd say 90 days, which incidentally, and I forgot to say in my earlier bit, is when ETH 2.0 has been said to be delayed to. So September, October time is when we should get the merge, when ETH stops being printed effectively and becomes a deflationary asset by about 1 or 2% per year, depending on how much it's used. So stay with me. So I would say it's not really a fair race. Of course, ETH is going to outperform the Nasdaq at this point and break up to the upside because one's a deflationary asset and the other's not. And it's hard to see where growth is going to be coming from in the broader economy. Whereas ETH gets to function as a store of wealth to protect you from inflation and as like an internet bond that earns a pretty significant yield, probably around 15% after the merge. So anyway, I think that's something we should see play out over the next 3 months or so. We'll see. All right. Goodness me. So I was just saying that Luna has had a torrid week. It's now at a pretty significant support line, as you can see. I personally just bought a little bit here. I'm dollar cost averaging in. The markets could easily get a lot worse, but rather than timing the market is better than timing the market. And the best thing to do here is to dollar cost average. We could be in a bear market for the next year, 2 years, 3 years. We don't know, and no one knows. And anyone tells you they know is lying. The best thing you can do is start to dollar cost average in at these prices, in my opinion. So, just think about how much you're saving. This is not financial advice. I'm just a guy on the internet, but just think about how much you're saving each month from your salary. Make sure you've got a nice emergency fund of cash, and then start just buying into your favorite cryptocurrencies, equities, whatever it may be, with that bit of disposable capital. All right. ETH Bitcoin ratio continues to hold nicely up here. ETH was up versus Bitcoin on the week, but has just back to parity, which is pretty impressive in a downward market, if you ask me. Generally speaking, if we're going up, ETH is outperforming Bitcoin. If we're going down, Bitcoin's outperforming ETH, but it's not by much at the moment. And we know, ETH has utility and is a store of wealth and will become deflationary. So anyway, we're just shy of that flippening by about 50% flippening by about 6 or 7%, but holding up very nicely. And then we'll just lastly finish with just looking at the dominance. And by the way, if you do, I should have asked you earlier, but please do press the like button if you're happy to see this bloke on the internet back, and please do subscribe and comment and all those things that YouTube algorithms enjoy. But yeah, looking at the Bitcoin dominance, if we consider what happened in the last kind of bear markets, Bitcoin dominance was 2017, of course, when ETH came on the scene and the dominance dropped down from 97% down to 36%, because suddenly we had this Cambrian explosion of all these alts that were built on Ethereum and others. Then the top of the bear market, 72% was that kind of dominance of Bitcoin. So it represented 2/3 of the market. But this time we've got this multi-chain world, a very different environment. And it doesn't feel like there's any chance Bitcoin would ever get back up to this dominance. It feels improbable to me. So even if we do see a sustained bear market, I don't think it would get back above 50%, in my opinion. Just my take on it. And you can see that still, despite us kind of getting into this more challenging environment, the dominance of Bitcoin is slowly dwindling. 40% is a big old line in the sand. It will break, in my opinion, in time, but we need to be in a much more bullish environment for that to happen. Oh yeah, and lastly, let's finish by looking at the total value of crypto as a whole. Can I find it? Total, there it is. Okay, so we're at $1.57 trillion. We are heading down to some lows that we tested back in January and February as a total value of this whole space. We haven't got to as low as we were in June last year, which is surprising, really, isn't it? So there we are. It's hard to odds. It's not very pretty overall. It may get a bit uglier, but just don't have leverage. Have long-term goals. Look at the horizon, not your feet. Go outside, enjoy the weather, and dollar cost average. Keep calm and dollar cost average and all that. All right, that's it for now. I'll speak to you soon. All the best.